Be Wealthy and Smart, episode 972.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about how millennials are becoming millionaires with cryptocurrency. And this is because a new study was done and CNBC was reporting on this, but I also wrote about this in my 3 Steps to Quantum Wealth book. And I want to share with you a little about what I said in the book. But before I do that, I just want to let you know that this chapter in the book wasn't just about millennials. It was also about Gen X and baby boomers. But one of the reasons why millennials are in particular very interesting is because they are adopting cryptocurrencies faster than any other generation. And it's paying off for them handsomely. The other day I was talking with my sister, and she said, I heard on CNBC that 1 in 5 new homes are being bought by millennials using gains from their cryptocurrencies. Think about that. The millennials are making money in cryptocurrency and are translating that into physical assets. I love it because housing is so unaffordable right now for young people, and this is providing a great gateway for them to close that gap and be able to have enough money to buy a home. So I want to share with you a little bit about what I wrote in my book about millennials, and then we'll talk about this very interesting CNBC article, because I think we can all learn from what millennials are doing, why they're doing it, and why baby boomers seem to be more resistant and how to overcome that resistance. So I wrote, Gen Y, or millennials, were born between 1981 and 1994 to 96. They are currently between 25 and 40 years old and number 72.1 million in the U.S. Gen Y.1 is a subgroup of millennials who are 25 to 29 years old. Currently, 88% of millennials invest their money, citing their motivation as to plan for their futures. Despite this, only 55% of them feel confident about their money management skills, according to Clutch, the leading B2B ratings and review platform. Only 45% are investing to build a retirement fund, while some millennials invest in traditional or Roth IRAs, 29%, and stocks, 25%, and mutual funds, 14%. The majority chose 401k plans, 53%. Millennials make up the largest adopters of digital assets as an investment strategy. Researchers believe one reason is because millennials grew natively with mobile and crypto. They understand digital wallets and treasure chests, which are part of games like Fortnite and Minecraft. Affluent millennials are ahead of their time and already smartly invested in cryptocurrencies. 47% of young investors who own at least $1 million in their crypto portfolios responded that they had invested at least 1/4 of their wealth, according to a survey conducted by the Spectrum Group. Additionally, younger millennials may not have credit cards or bank accounts, so they leverage crypto wallets to conduct trades and transactions. Younger millennials also are not as concerned about saving for retirement at this point in their lives as older generations are. Remember when I said the need starts kicking in the most around age 40, that is about saving for retirement? They are willing to take more risks in the hopes of winning big. For older millennials, their generation has lived through their adult lives bookended by financial disasters. First the 2008 financial crisis, then the pandemic. They've had to contend with spiraling costs for college and burgeoning student debt. Millennials are the best educated so far and value flexible schedules, free time, and meaningful work. They tend to spend more versus save, but still have the goal to retire early. I recommend they start investing early to maximize the time to compound. Remember my examples of how easy it was to accumulate a fortune the more years you have to compound? If you're a millennial, put that into practice now. Start saving and investing now. Even if you can only invest $25 a month, it will pay off dramatically over your lifetime and make a huge difference. Do the same as soon as your children are born. Start saving from day one. All right, well, I want to share with you this article from CNBC that says Millennial Millionaires plan to add more crypto in 2022, CNBC Millionaires survey finds. And there are 3 key points. Most millennial millionaires have the bulk of their wealth in crypto, and they're planning to add more in 2022 despite the recent price declines, according to the CNBC Millionaire survey. Second point, fully 83% of millennial millionaires own cryptocurrencies, according to the survey. And the third point, the crypto holdings of millennial millionaires stand in stark contrast to older generations of millionaires and could create a new dilemma for wealth management firms and how they work with clients. I think that is a brilliant point, because if millennials are used to managing their own money and they're very savvy with their own investments, are they going to be as willing to turn it over to a money management firm? And will they want to invest in something like stocks that are compounding at much lower rates than cryptocurrencies? I don't think so. Let's go on with this article from CNBC. And this was written by Robert Frank. It says most millennials have the bulk of their wealth in crypto, and they're planning to add more in 2022, despite the recent price declines, according to the CNBC Millionaire survey. Fully 83% of millennial millionaires own cryptocurrencies, according to the survey, which polls investors with investable assets of $1 million or more, not including their primary residences. More than half, or 53%, have at least 50% of their wealth in crypto, and nearly a third have at least 3/4 of their wealth in Bitcoin, Ether, and other types of cryptocurrency, according to the survey. The crypto holdings of millennial millionaires stand in stark contrast to older generations of millionaires. Only 4% of baby boomers hold any cryptocurrency, while more than 3/4 of Generation X investors don't own any crypto, according to the survey. So I want to pause there and say, what an astounding number. Only 4% of baby boomers hold any cryptocurrency. In a way, it's not surprising because, again, the younger generation grew up with video games and were used to using different cryptocurrencies within the games, so I'm told. But those of us who are more of the internet generation, this is all new to us. And I know it wasn't until I decided to take a deep dive and really research what was going on with the blockchain before I really understood that this was a true technological revolution and it wasn't all about Bitcoin, because all I could see were Bitcoin's flaws and it didn't impress me in the least. Now, that's not to say it hasn't been a great investment for people. It's compounded at over 200% per year. So I get it. It's been a fantastic wealth creator for the early adopters of Bitcoin. But for me, that just was not going to be my investment of choice. I needed to know who was behind the cryptocurrencies. I needed to do my due diligence. I needed to know what the technology was, what their goals were, what the profitability of the companies was. There were a whole lot of questions that I needed answered before I would consider an investment. And I certainly would never consider an investment where I didn't know who the founder was or who the real people were behind the investment. Now, these millennials who adopted Bitcoin early have grown fabulously wealthy, so congratulations to them. But for me, it's more about my long-term picks with technology that I see being the dominant technology going forward and lasting through the years. And to me, again, Bitcoin does not pass that test. The fees are too high, the energy usage is too great, the technology's already been surpassed. But it was the first. Being the first doesn't always mean you're the most successful. Just like MySpace and Facebook, just like Napster and iPod, Betamax and VHS, we can go on. Often the company that has the breakthrough technology is not the long-term survivor. But my point is that baby boomers having only a 4% adoption rate once again reinforces to me how early we are in this trend of investing in cryptocurrencies. how this isn't a bubble, because to have a bubble, you have to have everybody invested in the bubble for it to be a bubble, among other things. But it really says we are at the very forefront of adoption. The article goes on to say, the results suggest that crypto is creating a vast generational schism in investing and wealth creation. While older generations of millionaires are still largely skeptical of crypto and its future, cryptocurrencies have become the primary source of wealth creation and asset growth for many younger investors who got in early and have seen rapid returns. So I want to pause there and say, one of the things that made me write my book was the fact that the compounding rates in cryptocurrencies are the highest I've ever seen in history. And what that means is that you can start as a late investor, but if you're getting a much higher rate of return than you are in another part of your portfolio, say your stock portfolio, if you're getting 200% a year in Bitcoin and 10% in stocks, it's not long before a small amount invested in Bitcoin surpasses the total value of your stock portfolio, earning 10% per year. Does that make sense? So these high rates of cryptocurrency returns are astounding, and many are in the thousands or tens of thousands or hundreds of thousands of percent. And so this is what people are missing, is that the rates of return are beyond what it would take you a decade to earn in stocks. And this is because it's a new asset class. People are making the mistake of comparing cryptocurrency to stocks in terms of valuation, in terms of growth rates. It's not about Bitcoin being worth $1 trillion versus Amazon being worth $1 trillion. That's not an equal comparison, because in the currency world, currencies trade into the many trillions of dollars per day, and they are something that can have much higher values than stock valuations do. So I think it's a mistake to try to put a stock valuation on a cryptocurrency. The article goes on to say, this is a big difference between different generations of wealth, said George Walper, president of Spectrum Group, which conducts the survey with CNBC. Despite the recent price declines in Bitcoin and other crypto, millennial millionaires have no plans to dial back their crypto investing. About half, 48%, plan to add to their holdings over the next 12 months, while another 39% plan to maintain their current crypto levels. Only 6% of millennial millionaires plan to reduce their crypto investments over the next year. And I would bet that would be for something like buying a home. The article goes on to say, with so many millennials and Gen Z investors becoming millionaires from the crypto economy, it's likely to remain central to their investing in the coming years. That's created a new dilemma for wealth management firms. Most of the existing business of private banks, wealth management firms, and advisors comes from wealthier, older clients who don't want crypto and its associated risks in their portfolio or products. Yet their future relies on the next generation clients who are demanding crypto products and advice. I'm not sure the wealth management industry has recognized that they really need to think of these as completely different generations, Walper said. Most firms were hoping to ignore it, but millennial millionaires are not going to just grow out of crypto. Walper said many wealth management firms are reluctant to add crypto directly to their investing platforms due to the legal and performance risks. Yet with a growing number of crypto financial products becoming available, including crypto-based ETFs, many more firms are now able to start offering crypto products to younger investors. So I want to pause there and just say, I did write about the fact that I'm not a fan of crypto-based ETFs because you're not really owning the crypto. You're owning a derivative of the crypto, and the brokerage firm is owning the crypto. What you want to do is own the crypto and not pay the annual fees that you have to pay for owning an ETF. So it's much more advisable for you to download an app and go and buy the crypto directly and hold it in a particular wallet that will keep it safe and secure, rather than investing in a crypto ETF. I really don't recommend doing that. The article goes on to say that allows them to offer exposure to Bitcoin and other crypto without being a direct holder. Walper said there are two broad categories of millennial crypto investors: those who made their millions from crypto and those who added to their existing wealth, mainly received from inheritance or startups, by investing in crypto. Fully 45% of millennial millionaires credited inheritance as a factor in their wealth, according to the Spectrum survey. Among millennials worth $5 million or more, inheritance was the top factor at 75% in their wealth. I want to pause there and say that is a very interesting number. So we've heard about this tremendous wealth transfer that's going to happen from the baby boomer parents to the millennial children. And there is a great example that at the high net worth level of 5 million plus, 75% actually did inherit their wealth. The article goes on to say, at the same time, millennials who got in crypto years ago with small stakes from their incomes have become self-made millionaires thanks to crypto returns that have vastly outperformed stocks and other asset classes. The question now is whether millennials stay in the crypto market and in the ranks of millionaires if Bitcoin and other tokens have a prolonged decline. They seem to be comfortable with the volatility, he said. End of article. Well, I agree. I think millennials have gotten used to the incredible volatility, much more volatility than in stocks. However, they have seen the power of holding through and holding for the long term. And I think they understand that this is early in the trend, and we haven't even seen the big money come in yet. Yes, we've seen lots of private wealth, sovereign funds, even some pensions start to invest in cryptocurrencies, but we haven't seen the big money, the big hedge fund money, the big brokerage firm money, the bigger endowments and pensions, which are going to be adopting crypto as they adapt their policy statements, and it allows them to get into the crypto market. So far, we've just seen certain institutions dipping their big toe in, but those who have seemed to do extremely well. So more and more are getting into the crypto investing space. If you want to know more about crypto and feel like you're just scratching the surface, check out my new book, 3 Steps to Quantum Wealth, The Wealth Heiress's Guide to Financial Freedom by Investing in Cryptocurrencies. I also have a playlist of crypto podcasts. You can check that out on my blog at lindapjones.com/blog and see the list of crypto interviews and podcasts that I've done there. That will give you a really good foundation for understanding more about cryptocurrencies. And if you have read my book, thank you so much. By leaving a review on Amazon, you're automatically entered into a drawing to win signed copies of my book, $100 in my favorite cryptocurrency, XRP, a one-on-one wealth mentoring session with me for 30 minutes, and a lifetime membership in my private investing circle, the VIP Experience. I'll be announcing the winners of the drawing on the January 17th podcast, so mark your calendar to tune in that day and see if you've won. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.